All right, welcome everyone. I apologize for being a few minutes late. I was making some last minute adjustments. And as per usual, I'm just going to ask if you can hear me, and then we're going to jump right into it. And so today we have some very interesting news via the Fed. As you know, I've been tracking this for like the last few months, and this is something that I have anticipated and calculated into my projections for some time now, because I know that a lot is riding on this going forward. So, okay, perfect. All right, I'm glad you can hear me. Can you shout me out? Hey, Robbie. I appreciate you. Let's see. Awesome. Thank you, Peter, for becoming a member. Awesome. Okay, great. I'm glad you guys can hear me. Okay. So let's start with Dogecoin, and we'll obviously start touching on it and coming back to it, but we're also going to talk about the Fed meeting as well, and some of the pretty much the main factor that I got out of the Fed meeting, because that entire document was pretty much fluff, and it just pretty much made me double down on my thoughts that I got from the last meeting going forward. But we're going to talk about that in a moment. Let's just look at Dogecoin here, go over some points, and also take a look here at the charts. So when it comes down to Dogecoin, as you guys know, I don't push hype or like BS and stuff like that to get views or clicks and all that kind of stuff. I mostly look at the facts and the charts and compare macro and micro to get an idea of the momentum and the growth of the coin. So the biggest thing that we have for Dogecoin, and still is, and it's outside of the overall market and whether or not it's going to expand or contract, and that is the AMC catalyst. I believe that is the most important catalyst that we have this year as far as for utility. And Dogecoin's survival, its growth, its purpose is all going to be tied into utility. The other things that we have are great. Doge One is great. Tesla integration is great. GameStop's integration is great. That may play a part into utility. I'm not sure how many people are buying games versus just streaming them, but that plays a part. But as far as for an actual event that is not circled around hype or momentum that can pretty much just create a similar pattern to what we saw with Tesla integration. Let's see. The Tesla merch announcement, which was right around here on the 15th. Let me circle it for you. This is the Tesla, and we know shorts came in. This is where Tesla pretty much came in right here. Shorts came in, caused a bit of panic and fear, got the downward momentum, and then went down and tested the bottom again. That's going to happen when you're counting on catalyst and hype to push the coin. And that's not what we do here. That's not the purpose of the coin, because when you have hype and catalyst, and I think what a lot of people forget is, and I know a lot of it is because some people in the community and like YouTubers and blogs and stuff, they push hype. But what we're forgetting is when you have hype and these major catalysts come up and you see the momentum building, those are not people that are not necessarily, a lot of those people are not necessarily long in the coin or even care what happens to the coin. They're there to turn a profit relatively quickly and capitalize off of the hype. So you'll see whales and all this momentum and funds coming in. You have to keep in mind that a lot of those people are going to be, they may not necessarily be shorting the coin, but they're probably short, as in short term on the coin. So if you double that with people that actually hate the coin and literally want to short it down, and if you tie in the whales and a lot of the new momentum and the new people that came into the coin are simply looking to turn a profit and they're going to sell off, then you have the trajectory to have something similar to what happened here with the Tesla merge, which is this huge run up and then the huge run down, and pretty much it even overcorrected and came down further than it did from the time of the announcement. And to save everyone a headache and all that kind of stuff like that, we need to focus more so on utility. And again, I think AMC right now is our greatest catalyst for that. So ever since January, I said that I believe that this spread here I drew was going to be respected, and so far it has been. And I said that we potentially could come up and get another touch. We almost did, and we're pretty much trending sideways. I do not see this changing until we get some definite information from the Fed. And I was hoping to kind of get an idea of that today, and we did not. So it looks like this is going to be pretty much our range, probably until March 16th, which is the next public Fed meeting. So you can expect. So if your average or DCA is higher and you want to get into the teens, you still have roughly a month, depending on what comes out in those Fed and the Fed meeting on the 16th. But I anticipate that. Depending on that, I anticipate that they're going to be a little lenient in that meeting. I'll get into why in a moment. But we look at the minutes that came out today, and they pretty much said a lot of stuff that we already knew, saying that, oh, they believe that eventually inflation is going to go down. Some contradictions in there as well, because I listened to Apple and like Google and some of the big suppliers in the country that were saying that they were going to have supply issues, and they didn't expect it to be resolved until 2023. They said that it didn't have a, it pretty much they didn't see it concluding itself this year. And even Jerome Powell said that in the Fed meeting last month. And now in the meeting minutes today, they're saying that, oh, they believe that it's going to resolve itself relatively soon, hinting at it's going to be like this year. They believe that inflation is at its peak. And they mentioned that they were concerned about hiking the interest rates too aggressively, too quickly, and shocking the market pretty much and sending us into a downward trajectory. They mentioned that. And the biggest contradiction I had was if the actual companies, and don't get me wrong, I'm not saying the people at the Fed are ignorant, but I do believe we're in a unique situation. And I do believe what has worked may not necessarily work this time. But when you have the Fed saying the opposite of what the actual companies that are pretty much on the front line of these supply issues, when they say that, yeah, we're not going to resolve that this year, it'll probably be 2023 before we get those supply chain issues resolved completely. And of course, that pretty much is code word for we're going to have to factor that in, which is a form of inflation on the actual prices of these goods. And the Fed have released some minutes saying that, oh, yeah, we're looking at pretty much soon. This is going to be resolved. We believe the interest rates have peaked, and pretty much a complete omission of anything to do with specific rates that they were looking at to raise and the frequency of them. Like complete omission, didn't even hint at that. It was even on the table. And Jerome did this in the last meeting as well when they asked him directly plenty of times, so like at least 2 times. And he pretty much said they haven't discussed it yet. And I've said this numerous times in my videos that is a lie. Even with this secret meeting, I'm sure they brought it up in the meeting Monday or Sunday to go over what pretty much the plan was for this week, which I believe they kind of just finalized what they were going to put out in the minutes. But I do believe that they have an idea of how aggressive they need to be and how many rate hikes. But again, based on what I felt, and even they confirmed it in the meeting minutes today, that they're afraid of sending panic through the market. And this leads me to believe that I think that this may actually even be worse. It has an opportunity to be worse than I thought, because I think that the Fed is so fearful of repeating 2018, where the rumors got out and people pretty much started panicking that the injections of the money wasn't going to come into the market. And they confirmed that they still pretty much are going to end tapering in March. So that's still on the table, that the money next month is the last injection of funding money into the market. But this leads me to believe that they're afraid of repeating 2018. So they may do like 0.25% or something like that to kind of ease us into this adjustment in the market. And my biggest concern is if they are not wanting to shock the market overall and just be the main reason that the market and to send panic and be the main reason that the market is going down, and they're not aggressive enough soon, this may result in higher inflation and it getting away from them. So that's something we're going to have to kind of look at and monitor, to make sure that we are being a little strategic with our entries and being in the market, because the next few months are going to be really tricky. There's a lot. There's a reason that the Fed is tap dancing around this, and obviously we're going to see ultimately how this is going to play out in the market long term. But make no mistake, they're being very strategic with their words, and one of the reasons why they're tap dancing around. And of course, rumors of the war. Yeah, I saw that. They'll use war or whatever catalyst they can to send the market around. But if you look at the overall in the market, like I think that unless it's an actual breakout of war, I think short term it'll have an effect. But it really just depends on how much of a war, how involved the administration decides to get into this. And of course, as of right now, we're not sure. So there's a lot of uncertainty in the market. But I think that the reason we got those rallies today was because pretty much the Fed minutes said nothing negative. They pretty much just doubled down on what we already knew and what Jerome said in the last meeting. And again, completely omitted everything that was of importance. So, with that, you'll have a positive move on the market. So up until because we have tax returns and all that kind of stuff coming back. So up until we get some concrete information from the market, from the Feds, make no mistake that a lot of the coins that are not like some of the market makers, expect them to trend sideways or just hold their position, and expect some of the ones like institutional favorites, the ones that are mostly bought by institutions for funds, ETFs and stuff like that, expect them to, it's very possible that you can see them in the green, but the major catalyst for the market has not changed. So you can see these rallies, maybe even in Bitcoin, SPY for sure, some of these major ETFs, NASDAQ, stuff like that. You can see them react positively to this news, quote unquote. But just keep in mind that nothing has been resolved, and we still do not know any more about these interest rate hikes than we did a month ago or 2 months ago. They're literally dragging this out to the last moment. So the middle of next month, March 16th, is going to be a really big day. I'd say depending on what happens there, that'll determine the next few months. So, as I said, just make sure that you give yourself the opportunity to average in. It's okay to always be buying some, but just give yourself this, spread it out, in my opinion, and give yourself the opportunity to purchase, to capitalize off of a potential dip, because they really have two choices. They're going to have to be either aggressive early on, or inflation, or they'll come out and say, we don't want to shock the market, let's do 0.25%. And then inflation keeps growing. And then they have to come back and say, okay, we need to be more aggressive. So we're either going to get our dip now or later. But that, and them saying that, inflation is going to go down eventually. Yeah, everybody believes that. We've seen that historically. That's not the issue. The question is when and how, and when are you guys going to get it under control? So, this is literally a game of entries and patience right now. So if you can master those two, the people that are in position on this movement, you're going to be rewarded very handsomely for your patience and being able to navigate the market. So this is why I'm saying, if you have cash, or if you're able to, raise money, just again, give yourself time. Don't necessarily dump it all in and say that, 5%, this is the dip. Because nobody can time the bottom, but we do have a time when it comes down to these major catalysts. And so, you don't have to plan it like around Doge 1 or the, any of these big moves that's coming in the market, but we know that the Fed has a lot of influence on the institutional money, which makes up the majority of the money that's in the market. So, just kind of play it by ear, and we kind of have to stay on top of things. But we have those dates, so we know kind of where to look to, or at least where to plan around. That'll give us an idea of the next few months. So market makers, potentially Bitcoin, SPY, and stuff like that, not impossible for them to rally up until we get some concrete information from the red. And if they're not market makers, expect them to kind of like hold their position or even trend sideways, at least for another month. So, that's what we're looking as far as like the numbers. I'm going to go through, I know I've been talking, so I'm going to go through the comments here. Hey, David, thanks for being on. Yeah, no problem. I appreciate you. Where's the so-called executive action we were told about for February? I don't know, man. It's floating somewhere, right? Let's see. Is Elon Musk Tesla a catalyst? Yeah, no. Tesla and Elon is a catalyst. Don't get me wrong. My only thing for saying that it's not the most important catalyst is because you have to weigh it as far as for who has an opportunity to take advantage of it. So most Dogecoin holders, you can, and I'm talking about utility long term. Most Dogecoin holders, regardless of their financial position, can take advantage of the movies when it comes down to AMC. So, and there's always new movies coming out. They come out every week. So when it comes down to utility, we have to look at access and affordability. So access, it being affordable and being convenient. Yeah, AMC is the largest movie chain in the country. You have a movie come out this week, you can go next week, you can go week after that. So that's a form of long utility. When it comes down to Tesla, not everybody can afford a Tesla, regardless of what currency it's in. Dogecoin, dollars, pesos, whatever. Tesla is out of reach for most people. So, and even if you did buy one, that's going to be, a singular purchase for a specific group of people. So you're not going to continuously buy Teslas. You're not going to continuously buy shirts or belt buckles and whistles and stuff like that. You'll have that short-term momentum within, but it's not going to be something that's long-term that can be measured. Now, it's great, again, for adding credibility and bringing awareness to the coin. But, when we talk about long-term utility, AMC is going to be better for that. And ultimately, if we're looking to branch out to other institutions, like if you're saying we want to break into like the fast food industries or like a Walmart or some of these big retail chains, we're going to have to prove Dogecoin's utility away from Elon, because that will stop some of the hesitation going over there. Because to me, it would make perfect sense for these large institutions saying that, okay, why should we go through this trouble to accept this when everything of this coin's success has been tied to Elon, and which makes perfect sense. So once we start moving the coin to some of these major retailers, and I think AMC is going to be our biggest trial for that, I think it's going to be beneficial when we really show up and say, okay, look, well, AMC is not owned by Elon. This is away from Elon. The Dogecoin community is going to support the coin wherever it goes. So that now it's in our best interest. If we take this coin, we know that they're going to support the coin and come out and show out. And it's not for hype, or it's not because of Elon support. The community is going to follow the coin's utility. And I think that will make it ultimately more attractive for some of these institutions to take it. So hope that makes sense. So wait to buy. I can't tell you when to buy, but I'll again give yourself an opportunity to take advantage of better prices. I'll say this: I do believe it's highly likely we can see better prices on a lot of assets. And I'm not speaking specifically for Dogecoin, because that 12 cents resistance line held up a lot better than I thought. The reason I gave two like a couple months ago. 12 and 6. If we break 12, you're looking at 6, but it's possible that we can get the brakes pumped just due to momentum around like 8 to 10. But 12 was definitely the first one, and we were literally hit 12 and get a really good bounce. So depending on how things go, 12 could be the absolute bottom. So it's just we're just looking at the charts here. You have those ranges, but you don't know where retail is going to jump in and say, okay, well, it's oversold at this point, and to start piling in. So that's something you can't chart, but the ranges have been correct so far. So um, when it comes down to buying, it's okay to DCA in every week, every 2 weeks, but just don't go all in. And give yourself to kind of spread it out and give yourself the opportunity to capitalize off of better prices. I think it's highly likely that we can see some in the future. What do you think Dogecoin is going to be at the end of Q1 and Q2? Q1 is really hard. Right now it's hard to tell because we can certainly get a spike momentum from the AMC catalyst, but again, in the end of Q1 is technically like the end of March, right? So and we have the Fed meeting March 16th, which is literally like smack dead in the middle of March. So it's really up in the air right now, but I do believe that we have consolidated at a great point. And again, 12 is holding up really well. So worst case scenario, we can be roughly in this range. But what we're looking for, even with the AMC, for us to go test those levels where shorts like to knock us down at like 22, 23 cents, we're going to have to get to around 18.5. After that, we typically have that run. So technically the two triggers that we're looking for, 18.5 normally signals a run to 22.23. That 24 to 25 cent range, we're pretty much on our own, but after 25, we typically get that run to around 32 or 33. So those are like the trigger ranges that we're going to have to look for. But again, based off of the last two runs we've had, shorts come in heavy once we get over 20 cents. So I'm very curious to see about the momentum of AMC and stuff like that. But again, those are hype and catalysts. So that's not the absolute focus, but they do play a part. Q2, it's different. It's definitely difficult because Q2 is certainly going to depend on Q1. We can have a great run in Q1 because let's say they come out with that 0.25%. And the AMC catalyst comes out and we're able to generate the momentum. And then Q2, obviously, let's say the inflation hasn't been under control and they come back and say, okay, well, we're going to have to be more aggressive. And then we have our down run then. So, it's really just up to, as far as for the actual run of the market, it's really just up to, what goes on with the Fed. But we have the catalyst here to start building our foundation and to start removing some of those coins from the pool through AMC. So I think that's going to be our biggest thing for Q1 and Q2. But as far as for us actually running to get like a actual price, that's a little hard to do right now. Let's see. Glad to see you back. Glad to be back. Let's see. Do you think the dip is coming now or later? I don't think it's coming now. It's definitely the market in general. People chase green candles, right? If it's green, people feel like it can't come down, right? If it's red, people feel like it can't go up. That's like a psychology of investing thing. But our indicators, as far as for what type of, at least the next few months, are going to come mid-March, and that's around that Fed meeting. So we're pretty much going to have to wait. I thought that hopefully we were going to get like some type of indicator today. I was hoping, but it appears I was a little optimistic because they're still tap dancing around the actual issues and addressed nothing of extreme importance, in my opinion. Like there's literally like an elephant in the room, and the Fed literally just like tap danced around it and didn't address it. And pretty much was like, okay, well, you guys will find out in March. So if we were to have a dip overall in the market, obviously that would affect Dogecoin, but we'd be looking at mid-March. So as of right now, unless we get something crazy going on with like Ukraine or just something that's in mass panic through the market, we can expect pretty much more of the same for another month. Let's see. I'm learning to leave some cash. It's hard for me. Sorry if you covered it. You like any smart contract coins? Thanks for what you do. Um, I mean, I guess the closest thing I can say would be like Ethereum, but other than that, I have like my top five. I prefer normally to go deep versus wide. So like my favorite coins, obviously like Cardano, Ethereum, Bitcoin, Doge. I have some Litecoin. Those are like the ones that I would rather go deep versus wide in. So I haven't spread too much as far as for into like smart contract coins, but those are the ones that I do hold. Let's see. We need some real utility like DoorDash, Uber, Lyft, Amazon, etc., to really pump some life into it. Yeah, it's all in the utility. That's where we're going to get our growth from. Um, Utility, yeah, because like as long as if we you can't longevity wise, we can't just wait on catalysts and stuff like that because we're going to have to put some foundations into the coin. And once we have those foundations and those partnerships, you'll be surprised at the opportunities that we can create and attract new catalysts into the market, bigger ones. So I think that overall, we're going to be able to branch out and have those partnerships with a lot of different industries. But it's up to us to just make sure that the partnerships that we have now are successful enough to attract additional partners. So that's why I say we have to show up and show out for our AMC catalyst. So when Adam Aaron makes that announcement, we need to make sure that that weekend is historic. We need headlines. We need to make sure that anybody that's even contemplating accepting Dogecoin knows that the Dogecoin community means business. So, and that's up to us as a whole. So hopefully we can do that and get us trending, not trending, but growing in the right direction. Let's see. I watch a lot of financial advisors. They say we must have a 50 basis point interest rate hike. In March, the markets would go down a little bit, but 25 points scared down also by inflation. Yeah, so I think that I think they're right. I think, in my opinion, 50 should be like the absolute minimum. But I just what concerns me is based off of the inflation, depending on how aggressive they are, how many. Um, I just don't. What concerns me is inflation may get away from them, and what is scaring me also is the way the Fed is acting by purposely avoiding like the elephant in the room. So if that's the temperament going forward, I believe that they may be not as aggressive as they should when this comes out and do something like a 25, even though it's widely agreed upon that it needs to be like 50. So, and I think at that point, if you come back and they'll say, okay, well, we did the 25 and it's not aggressive enough. So we're gonna have to come back and raise it again. Or if they have to break cycle and raise it sooner than anticipated or the estimated dates, that sends mass panic. And to me, I think it's just better to do like the rip the band-aid off now. Especially now since most people are kind of, I don't want to say most people are expecting it, but it wouldn't be a complete shock to everyone. But the temperament that these people are dancing around and avoiding this stuff, it really has me concerned. Really has me concerned. Let's see. Yeah, because inflation, I'm not sure what you mean by scared down also by inflation, but yeah, so I don't know if that'll be enough if they do 25, if that'll be enough to handle the inflation or get it down. So um, and maybe they'll just do a bunch of small ones close together because it seems that I know that Jerome said it's not in the focus of the Fed is inflation and market participation, i.e., jobs. So I know that for the most part, he's not completely concerned with mooning our stocks, but I also know that he doesn't want to literally cause panic and send the stock market through the floor as well. So it's really just up in the air. But I do believe that based off of where he's the temperament and what was the wording that was in the minutes today, I expect them to probably do a 25. And I honestly don't think that'll be enough. So we'll kind of see. But um, that'll just pretty much determine what kind of market we're going to have. So they may kick the can down the road a little bit. So we may have nothing or no big crash or pullback in March. And it may just be pushed out a little bit. But what's inevitable is the inflation has to be pretty much under control, especially if it's growing month over month. The companies are projecting something much different from what Jerome Powell is saying. Not Jerome, I'll just say the Fed is saying that supply chain issues are going to be eased by this year. Apple and some of the other larger companies said no way. So, I mean, maybe, I'm going to say maybe, but I guess maybe the Fed thinks they know better. We'll see. And ultimately, it's just something we're going to have to be able to keep an eye on, because this will be a trickle-down effect massively, even through the markets, through real estate, everything. Like when that funny money leaves, it'll hurt, but it'll provide a lot of opportunity for people that are ready. So everybody that's on my channel, and we're getting ready. We're keeping an eye on this, and we're setting money aside. We're being strategic about our DCA, so we're getting ready. So I hope that is a focus point for everyone. Let's see, thumbs up. Yes, please. If you haven't liked the video, please do. I have no idea how many likes the video has, because I use a different program, but definitely if you can't like the video, they're pretending nothing is wrong. Yeah, they pretty much are literally afraid to address everything. Like, this is the second opportunity that they've had in the last like 30 days to kind of be like, hey, here are the interest rates that we're thinking, and here's the frequency that we're thinking. And you could have possibly even kind of already priced it in. And this is what I don't understand, because if he would have given those at least what the range of what they were thinking, because there's no way that they haven't there's no way they haven't discussed this, and we're coming up on like less than 30 days before this has to be public. So again, I believe that's a total lie. But if people say, oh, it's baked in, or it's it's already included in the market, there was time to pretty much have this kind of like baked in, or this fear or stuff like that. If you'll say, hey, nothing's concrete yet, but we're thinking about 4 interest rate hikes, 4 hikes, 0.5. There's time for this here. But the fact that you're literally, oh, we don't know, the Fed minutes come out, you don't talk about it. So the fact that you're going to literally just drop that on the 16th, it may have the opposite effect of what you're looking for. So, we'll see. Like I said, March 16th is, if you are new in the market, if you start investing in like the last 24 months, March 16th is going to be a very, very interesting day. So I strongly suggest that everyone pay attention to what is said and watch how the market reacts. It'll certainly be educational. I'll say that. Our local Honda dealership is not accepting Doge or other crypto. Boom. Okay, that's great. That is great, especially Hondas. That's a little bit more in the affordability for most people. So that's great. Thank you. Yes, definitely hit the like button. I appreciate you too. Do you think Ethereum is going to go up to 5K again? Yeah, no, absolutely. I think that a lot of these coins are going to revisit some of their prices and even go higher. The question is when, depending on what kind of market we're going to have. So I don't think we've seen the best of Ethereum. I don't think we've seen the best of Bitcoin. And a lot of times people, because I'll give projections on like a bearish side. They'll be like, oh, he's being bearish and stuff like that. No, I'm being realistic. I'll never be ignorant or come on here and try and pretend that everything only goes up and just feed you guys crap and say that, oh, well, I'm not going to discuss the other side of the coin here. I'm only going to put out videos that say to the moon and, we're going up. No, I'm going to give you both sides and you make that decision for yourself. So, yeah, but even if I give numbers to like the downside, or if I believe there's like an elephant in the room, I'll never say that the market isn't going to appreciate. the market averages up most years. We do have cycles, we have recessions, we have bear markets, absolutely. People take profit. We do have moments of fear in the market, external, internal, but you have to make sure that you're prepared for both, especially if you see something, looming in the market. It's not like you got caught blindsided. So, if you know that we have record inflation, the highest inflation we've seen in like the last 40 years, if you have the Fed coming out saying that, hey, inflation is transitory, this is all going to be fine. They come back a few months later, inflation is not transitory, everything is not fine. And, you have an opportunity to kind of prepare for these things. If you choose to ignore it and be ignorant and say, okay, well, everything's fine, it's going to go to the moon, and you literally have our government making adjustments because they didn't anticipate this. And those are your choices to make. But I take a approach where I factor in macro and micro. I believe all of these coins are going to appreciate over time, but I also look for strategic entries so that I can have more cushion in between my entry point and the current price. I love having cushion so that, let's say Dogecoin gets a run up to 50 cents and then comes down to 30 cents. I love having a DCA that is well below that because I have that cushion in there. The problem is people say, oh, Doge is dead, it's not going to work. And then when you have that run up to 50 cents, they'll say, oh my God, it's going to $1. Let me buy in at 50 cents. And then you have the pullback to 30 cents. And then here they go again online. It's a scam. It's dead. And the cycle just repeats. So I'm optimistic on the market as a whole. The market is going to appreciate. It historically does. And I think that Ethereum, Bitcoin, I think that for right now, those are still going to be the market leaders. So I do think eventually Ethereum will probably fall down on the list. It'll still be top 10. But for right now, I think Ethereum is in a great position. Let's see. Seems like they're trying to manage the situation without creating shocks to the system. That's exactly what they're trying to do. That is an absolute fact. Get y'all some raiment and put some money back. Facts. What's happening on March 16th? The Fed is having a meeting. They're pretty much releasing the rate hikes and the frequency. So, or at least the first one. So that's going to be great. And also all the funny money that's in the market, we're going to find out. So pretty much the last couple of years, more so like the last 18 months for sure, the market has been, you can just say that the prices that we've seen are not natural. The market has literally been on steroids. So the thesis is, what does the market look like without steroids? Because you can't say, if the reason why I say that, and I'm not a bear, but again, I'm not stupid either. You can't say that there's no difference between the market with the money injections and without the money injections, because if that were true, there would be no point for the money injections. So clearly there's a difference between the injections, with the injections and without the injections. The question is, how much of the market is propped up with the injections? That we do not know. That is like the mystery number. So my job as an investor is, I'll say that if we're here with the injections and maybe without the injections, we should be here. I'm trying to catch some entries in here so that I can ride this back up. So that's literally what all this is about. And the question is like how big of a gap it is, because it could be like this, or it could be, much, well, you can't even see my hands, but it could be much bigger. You guys get it. So that's pretty much what's going on. The Fed stops pumping the market. So that's pretty much the greatest, outside of the interest rates, obviously, and sending panic in there. But yeah, the other side of the sword is no more funny money into the market. So, which is no more bonds, mortgage-backed securities. Money is going to be harder to borrow for margins, and buying all these fake shares and stuff like that and injecting into the market. So we're going to see what the market actually looks like. And the goal here for myself and for you guys is just to kind of be aware of that and to time our entries so that we can have that spread on there and make a lot of money. And if the market, if they stop putting the money in and there's mass panic because of the inflation out of control or the rate hike, and if we can catch some of those shocks to the system where the coins and the stocks actually reach a point where they're oversold and the companies are undervalued, that's where you make a killing. That is where when you buy in, it's next to impossible to lose money, right? So it doesn't matter what happens to the coin over the next year or two because you're going to be in the green because you bought it at a price that was significantly undervalued. That's why most of my Doge is at like 2 cents. So even at 70 cents, I'm in the profit. At 10 cents, I'll be in the profit. So, those are types of entries that you want to have because those give you the most amount of leverage. It gives you options. So if you need to sell some for an emergency, you can. You're still in the profit. If you want to buy some, average up, or simply wait, okay, yeah, you're fine. You can do that. You're in the profit. You're not the current price and your DCA is not like that close. That's the purpose of having some cushion there, is so that you can have options. So, yeah, so that's pretty much what's going on. Let's see. Thanks for your time. I appreciate you, Roberta. Thank you. I just got my Dogecoin wallet. Absolutely. That's great news. Let's see. I no longer scream out to the moon because of your perspective. No, I mean, I do believe a lot of these coins and stuff like that are going to appreciate, but it's just that we need to be, just, I just want to, because I'm not going to, and I know that's favorable for YouTube and most people, they like to pretty much be like rock to sleep, and it's, things get more promoted if you say to the moon, and it's just, if you just pump blind optimism, I get it. But I'm not going to make videos on one thing and then do a different thing or have a different perspective. So I'm just sharing literally what I do. You can agree with it or you cannot. But some of these coins, a lot of these coins are still going to moon, but it's just that you have to be in a position to take advantage of these coins and these prices, because the truth of the matter is it's not always a great time to buy. That's why if you say, okay, if you're going to do your DCA, if you spread it out over the course of the long term, then yeah, you can realize those gains. But if you have $500 here and you invest, or if you only invest when the candles are green and stuff like that, more than likely you're going to end up in a situation. So especially if you can't chart and stuff like that, which most people can't. So we just kind of got to have that in mind. But yeah, most of the coins are still going to go to the moon. But I want to make sure that I can answer for everything that I put out in 5 years. So, because a lot of these YouTubers, a lot of this stuff a lot of this crap that's being pushed out right now, a lot of them are not going to be here in a few years because they're not going to be able to answer for some of this crap that they put out, or they're going to be deleting videos. Let's see. If we get bad news on March, do you think Doge can still hit $1 this year? Yeah, I mean, it really just depends because the thing about it is, and this is what I hate about what happened today, is they gave us no range. And I'm not asking for, Jerome, even in his last meeting, he didn't have to come out and give us the concrete plan. He could have gave us an idea and gave the market time to factor this stuff in. And now we are literally clueless until the actual day. And I was like, this is literally, if you're writing in the Fed meeting, we don't know, market exposure, shocking the market, all that kind of stuff like that. If that's what you're afraid of, you've had time to give the market the ability to adjust. But because you're not trying to shock the market, you're probably going to end up shocking the market. Unless it's really his intentions to come out with something really light, like a 0.25 or something like that 0.25% to try and ease us into this trajections. But long term, I think that where we go this year is largely determined based off of these rate hikes. And unfortunately, I have no idea, because they're avoiding this at all costs. I have no idea how aggressive they're going to be, how many they're going to be, because the worst thing that can absolutely happen. Let me tell you the worst thing that can happen. The worst thing that can happen is they come out with a 0.25 in March, and inflation goes up in March, and inflation goes up in April, and they have to come back and say, hey, this is not working. We're going to have to be much more aggressive. Instead of 4 hikes, we're going to have 6, and they're all going to be 0.5%. then that's when you get you like we on that slide to hell, because they didn't want to be aggressive enough quickly, and they wanted to babysit the market and wait, and because they're afraid of putting the information out there when they had ample time. They've had months to prepare us, and we could have factored this in, already reached a bottom or somewhat of a bottom based off of the aggressiveness, but they're charting this stuff and not saying anything. In January, Powell got up in front of everyone and said that inflation was worse in January than December. They asked him, hey, what's the numbers? Don't know. We haven't discussed it yet. We haven't finalized anything. Today, a month later, came out with the Fed meeting. Hey, would have been great to know, hey, what are you thinking as far as percentages, rate hikes, the amount? Nothing. So March, it's up in the air. I wish I could, there's nothing I can chart or look at. I can only speculate. And again, that's based off of nothing but my opinion. But, I don't know. I don't know. It really just depends on these rate hikes. Okay, who is this here? Webcam. All right, so that's how you're gonna get yourself blocked. Okay, best on YouTube. Thank you, Al. I appreciate you. I appreciate you. Those will help me get my home. Absolutely. Absolutely. Just time your entries. How do you feel about NFT? Yeah, NFT market is new and it's going to grow. I'm bullish on not a specific NFT because a lot of them are bull crap, but NFT as a whole, I do believe there's space in the market for it. But I do think NFT is going to go through its phase, kind of like what the crypto market is going through, where any and everybody is going to be creating them, and most of them are going to end up worthless. And then we'll have a purge, like a consolidation point, and then it'll kind of grow from there. Let's see. How is 1K profit in my wallet different than spending the 1K from my wallet? Taxes. Yeah, I mean, the profit. So technically, you can sit on all the profit you want, and because it's unrealized gains. And I'll say this because I'll just say I'm not a CPA. I'll definitely seek a counsel from a professional, someone that's certified for this. But this is, in my opinion and from my understanding, but when something is in your wallet or at your brokerage, it's unrealized gains until you sell. So if it's just sitting in your wallet and it's just gains, then there's no taxes. It becomes realized gains when you execute the order and you sell. And then, of course, yes, you have those taxes in there. So, but if you're saying if you sell and keep it in your wallet, do you have taxes? The answer is yes, regardless of whether or not you spend it. Because obviously if you sell, you have those taxes, and then when you spend it, you're going to have sales tax on there as well. So you guys know how it goes. But it doesn't matter where it sits, but if you execute an order to take profit, there's taxes. Let's see. Don't you think rate hikes are inevitable at this point, David? Absolutely. Absolutely. Rate hikes are inevitable for sure. Let's see. The tax income is realized gain is considered income. David, you're awesome, by the way. Thank you. I appreciate you. Let's see. Another thing lots of people fail to realize is that every time you sell, whether it's crypto or stock, it is now taxable. Therefore, your holding long term is always the best. That's a fact. That's a fact. I said, hey, David, just adding cash into my account because I believe after March, the market will dip. And that is when I'm going to start DCing. Smart. Yeah, get those spreads, man. Get those spreads. David, will you do a video on March 16th? If so, what will you discuss? Yeah, I'll do a video just like doing today, because I just wanted to, even though there's technically not much to go over in from the Fed minutes because it was a complete crap. But I'll do one March 16th. Maybe I'll do like a live because it's just a little tricky. Just because if too many people are doing it, then YouTube will start taking videos down for copyrights, and they may kick me off the video or something. So I know there's a way to do it. I may, but we'll see. But I try not to get like strikes against my channel and stuff like that. But regardless, if I don't do it live, I'll do like a review afterwards. So that's the most important day of the year, most important day we've had probably in the last year. So yeah, I'll definitely be covering that because that's going to determine our short-term future. So you can best believe I will be covering what the discussions are on March 16th. Absolutely. It really looks like double-digit inflation soon. The Fed needs to make a move. I believe we're already in double-digit inflation. I think that the Fed's way of calculating inflation is funny, just like they do their unemployment numbers. Like if you stop looking for a job or something like that for 3 months, you fall off the counter, some BS like that. And even just based off of if I made a video yesterday, well, the day before yesterday, and I went and I posted some of the screenshots of different entities and the rate hikes that they've placed on their products. And if you look at overall just like purchasing power and go get like some averages from just like from everything from like fuel to household goods and stuff like that, you factor that in, you will not get 7%. I can guarantee you that. I do believe we're already in double digit inflation. Little bro, great to see you live. Let's see, Nation needs lights up and drag. The fish is in the line, and he is a whole 2020 OG gorilla silverbacks. Thank you. I appreciate you. Yeah. Even as far as like with the AMC is going to do well too. I think it's close to. I still believe Q1 is going to be the time frame. So I'm very excited that they spent all those shares and still couldn't get it down below like 14. So I'm still bullish on AMC. I still have my shares. A proof of stake changed the game for Doge. Yeah, it'll certainly have an effect. And I think that even just like as far as when it comes down for verifying like the blockchains and stuff like that, I think that even if you say it's green or it's cleaner, I think that ultimately it may, just depending on like the miners, it may slow down production a little bit, but I don't believe that it's because I've seen that the catalysts get pumped for that, saying that, oh, well, it can slow down production and we may get like some rate hikes and stuff like off of that. I don't think it'll be anything substantial to create like a scarcity value aspect or anything. So, as far as it being cleaner and probably more attractive, you can say it can add like an advantage, but I don't think that overall it's going to have like a huge effect. I know as far as when it comes down to staking like on exchanges, I think that we're going to see more of that, specifically at Robinhood, because I know a lot of people, I'm surprised they haven't done it yet, because I know a lot of people Robinhood had like the biggest wallets for Dogecoin. So I thought for sure by the time the wallets come out, they were going to offer some form of staking and rewards for coins and stuff like that, but they haven't yet. So, but I do anticipate they will, because even on my channel, I've done polls, and roughly it was around a 70-30 split between the people that said they were going to stay on Robinhood. So I know a lot of people that have Dogecoin, they're actually going to keep using the platform. So I think that we can have some staking on there as well. So yeah, overall, I don't think it'd be that big of a deal, but I do think it can be more attractive just because it's more of a cleaner form. Let's see. So the next Fed meeting will be March 16th. Sorry if I was already answered. Thanks for breaking the Fed meetings down because it's like gibberish to me. No problem. Yes, the next Fed meeting is March 16th, and there wasn't much to break down on this one because those minutes were absolute trash. So, but yeah, next one is March 16th. Those are the deadlines. We're going to get the last bit of funny money into the markets that month. We're going to have some ideas for what the year is going to look like, these rate hikes and the frequency. So March 16th is the day, and I will cover it for all of you. Don't we're definitely going to go over that. Don't worry. Let's see. Okay, he's still here. Okay, you're getting blocked. All right. Let's see. Do you think SpaceX is going to accept Doge for merch? Yeah, I mean, I can see that transition. I can see that transition. So, yeah, I can see that happening. Let's see. Let's see. When you can buy merch with Doge, is it based on the Doge current price? Does it make sense to purchase Doge specifically for and when you're buying a product? So a lot of times, so what I've seen, especially people who don't have like just like a bunch of coins, they were stating that they'll use some of their more recently purchased Doge because it's close to the actual dollar value. And most of that just comes down to people not wanting to move their DCA with spending Doge, but you can do it really just any way you want. And if you have a Doge account, like you can, I know a lot of people are pretty much have like literally that's like their spending account. So they look at it like, okay, this is gonna be for my Doge purchases. So they'll do pretty much just convert their cash into Doge, and they feel better because it's the Doge that they just converted is more closely following the current price than if they had their other platform. Let's say they bought Doge or their DCA was like what let's say DCA was like 55 cents or something like that, and they're spending it at 14 cents. Then I can understand you feeling some kind of way about that. So yeah, that's not an issue. You can really play it any way you want. I know a lot of people are literally doing it the way you described. So it's really just up to you. But for DCA purposes and sanity purposes, it does make sense to do it that way. Let's see. Can you do TA on Apple really quick? Yeah. See, I like Apple. Apple, I believe, is going to be the world's first like $10 trillion company. Apple is pretty much indestructible at this point. I almost say it's like recession proof, but Apple is by far amazing. Let's see. 172.55. The 5-year. So historically, if you're looking for entries, because I like Apple, even at right now, I like Apple at anything like 150. But Apple is one of like 3 companies that I think that you can buy like every month and not come up. And over long term, you will not get screwed. Like Apple is just that great. But if you're looking at the long term, again, here, this is like the 5-year chart. The 21-day moving average, when you're able to catch Apple around that time, you can see, hold on, oh, I have it here. You can see there's normally a rally there if you're looking at the 5-year. And depending on what chart you use for like your entries and stuff like that, you can see that 21-day moving average is really significant. You had like a few instances that it didn't work out, literally like 2. But most of the time, you kiss that 21-day, you're bouncing up. And in the short term, let's see, this is the 1 year. Yeah, even mostly for the 1 year. And once you hit that 21-day moving average and dip below it, you're typically pretty good. So even right now, you're right on the 21-day moving average. It actually wouldn't be a bad buy. Now, I'm not saying that Apple is immune to anything that can happen with the Feds. I'm not saying it's like completely immune, but long-term Apple is going to be amazing. So, but I would say you just give yourself some room here. And, if you're long on Apple, obviously you just can buy it. I would say literally monthly and you'd be okay. But here I'd be looking at like 160. Yeah, because even here at like the 21-day moving average, you're looking at like 164. You came down, got some strong rejections around 157. So if you can catch it at 160, that's okay. But that again, that's still a tight spread, and I know this is a little bit more expensive than some of the coins, but you're right on that 21-day moving average. So if you're able to get a breakdown below it, that's fine. But I obviously don't want to purchase to like 182. You want to give yourself that room. So if you want to have yourself, let's say like a 20% split, hold on here. Let's take a look. 26. You can say, I say like 150. So a good solid entry, you can say like 150 if you can catch it like down here. But the thing about it is Apple there's a lot coming up. That'll give you like your roughly your 20% spread. But I say 160 to be safe because it's very rare that Apple corrects that much. So I hope that helps. Let's see. I think Robinhood will redeem itself after all those wallets roll out. It's possible. I don't think. I think Robinhood is still. They've PO'd a lot of people, but I think Robinhood is still at a point where it can redeem itself. So because I was very shocked by my poll, how many people said that they weren't going to leave Robinhood. So I was very shocked by that. So I think that where's my chart? That Robinhood is still at a point where it can be forgiven and kind of make a comeback. So we'll see. Let's see. ETC and Doge chart look the same. That means news doesn't affect the chart, meaning it's all algorithm. Yeah, algorithms, especially today, because you can see that like literally like minutes after the minutes were released by the Fed, you can see like a lot of the charts start turning green. So they literally did like a quick scan and started pushing their buttons for the algorithmic trading. So but the market makers are going to be more so like a Bitcoin and like their SPY and stuff like that. Those are going to be the ones that typically react first. But yeah, algorithms top 10, they're not weighted evenly. So I do believe that Bitcoin and Ethereum are more heavily weighted than something like a Dogecoin. But yeah, that's why you see the patterns. You're right. That's why we see like the patterns and stuff that mimic each other. I believe they're all on a similar pattern, or I guess algorithmic trading pattern, but they're just weighted differently. But yeah, market makers typically are the most influenced by the news and the media. So that'll be something that Dogecoin wouldn't fall into. Ethereum, not necessarily. Bitcoin is going to be your most influential market maker. Let's see, David, do you ever share what your portfolio percentage age looks like? I do so in like increments. I know some people do that. I've thought about it, but normally when I post, I'll post like my entries or something like that. And if you care to figure out my percentages, you can. But I have some posts on my community section. I have some posts on Twitter, probably more so on Twitter. But yeah, no, I normally just post like my actual entries or my dates as far as for in the positions. If I do share something like that, and if you care to know my percentages, it wouldn't be difficult to figure out. Let's see, David, do you teach courses on stock crypto charting on Skillshare or Udemy? If not, you should. No, I haven't. So it's so funny. Skillshare is actually approaching me about that, but no, I haven't. I just don't really have time for that now because even with some of the other projects that I'm working on, between this and like real estate and a lot of stuff that's going on, a lot of the opportunity that we have coming up, I just want to make sure that I'm in position to capitalize on a lot of the opportunity that's coming up this year. And maybe something I do in the future, because I do think that it's important for most people, even like doing like a psychology of investing portion, just so that people are properly knowing how to, search for liquidity pools, how people, making sure that they're not just looking at micro, but they're overlapping macro and micro together and being able to paint a clearer picture. So that's maybe something I'll do in the future, because I think that it's important, because right now, a lot of times people just depend on media or influencers to kind of get their information. And that's why everything's all over the place and people end up losing money. So I not just yet, but I may. Let's see. The full moon will be subsiding tonight. Do you believe in the crypto lunar pattern? Thanks. No, I couldn't even say I heard of the crypto lunar pattern before. So that's actually news to me. So I'm not going to say I've subside to it right now. But that'll be something I have to look into. I'm not sure exactly even what it is. So, but with that, I'll just have to say no. I don't believe in the pattern just yet. Let's see. Thank you. I appreciate your channel. I may have a watch party on the 16th of March. Okay. Yeah, that's great. And thank you, Andre. I appreciate you. A watch party. Yeah. I mean, maybe I need to do one on the channel. I just have to figure out how to do it and not get the video taken down. Let's see. I bought Tesla merge very easy and low fees. We need to support our investments. Facts. Facts. Let's see. Thanks, David. Much obliged for your videos. Keep up the great work. I'm learning a lot from you. Nice to hear honest info, good and bad. You say it like what it is, not what people want to hear. Yeah, no, I think that's important. You guys can make your own decisions. That's, everyone here is you're either an affluent investor or you're new, but you're not going to, if you're new to the market, I'd be misleading you just by, creating pumping videos and to the moon. And if you're an experienced investor, you're going to know better and not take me seriously. So either way, that's, it's a negative output in the long term. So, absolutely. I always make sure that I just put out stuff that I can be accountable for a few years from now. What is a short squeeze? Pretty much a short squeeze is when people take out margin on accounts, or they have pretty much became short on a position and they have to buy back those shares, and those shares are not available, or the demand is too high on those shares and they're not able to cover those positions, and the shares become scarce. And then the people that have to cover those positions to cover their losses, they're now competing on the market with people who are either not selling their shares or currently buying their shares at the same time, creating like a short squeeze. So pretty much when you short a stock, you're a guaranteed buyer. It's similar to a short is you pretty much wanting the stock to go down. A put is the same as you wanting to go the stock to go down. But a put is you have the option to it's literally like a call option, but it's the opposite. You have the option, you're wanting the stock to go down, but you have the option to purchase, to sell those and collect profit when it goes down. A short is there is no option. You're a guaranteed buyer when you short. So if the stock continues to rally, or if you have a situation where a bunch of people pile in and the stock goes 10x, you're going to have to be a buyer at 10x, and you're either going to have to buy there and push the stock up, depending on how much, if you're like a whale or something, you're going to buy at those higher prices and push the stock even higher. And, people in the short squeeze at that point, they make a fortune. Or you start coming onto the market and you're competing with a lot of the buyers. So you're trying to buy as quickly as possible. But of course, you're still pushing the price up. And now you have new money coming in to try and capitalize off of that as well. And you can create a short squeeze like that as well. But long story short, you're pretty much having to cover the position, produce the shares that you shorted, and they're not there or not easily accessible for you to purchase them. So, and that just results in a violent, it's literally not even like going to the moon. It's a very violent rise in price. So a short squeeze is, I guess if you consider, like a 10x or 20x or something like that, a rocket to the moon, then a short squeeze is like a rocket with like thrusters, and it's like a rocket on steroids almost. So it's extremely violent, but normally, it's you can't even put a cap on it really. Especially now, they may start halting stocks and stuff like that, like we've seen over the past year or so. But it's extremely violent, and you can make a fortune if you're on the right side of it. Let's see. Would you teach me how to chart? I don't mind paying you. I believe you're in my members section. I may post something in there for you guys. Something we can go over some few points in there. I can do something like that. Because I was going to put something together anyway for my Patreons. Something not necessarily like in depth again, because like doing videos and stuff like that and like a course that takes a lot of time. but I can put together like some fundamentals or something like that for members of Patreon. So that makes sense. I may. So just comment on like my last post in the member section, and I guess you guys we can go over some stuff and kind of put it together. Let's see. I hit the like button 3 times. I appreciate you. Um, so many new coins coming in the market, and we'll end up in a bull trap. Yeah, I mean, most of these coins are not going to exist. Like, like in 5 to 10 years, these coins are going to be like ancient history, and it's literally going to be like this is one of the things I tell people. You have to make sure that your coin is covering bases, and it's not just a money grab, because this is going to hurt a lot of people, and this is going to usher in a lot of the regulations and stuff like that that we see in the market. So I think that and I do think that we need some protective measures in the market, but just because of like a lot of people are naive and they have shiny object syndrome. So if a coin comes out and it has 5 zeros in front of it, they'll be like, oh my God, I can put in $100 and make 100,000. And so many people, and the devs end up having like 80% of the coins, and they dump on them and they run off with the money. And this is going to happen so much that we're going to probably have some extreme regulations in the market. Like bull trap is like, even putting it lightly, it's going to be like rug pulls. But yeah, you just got to be careful. There's a lot of crap out there, a lot of crap. ANC will make history. Absolutely. Absolutely. Let's see. I'll be buying about 12,000 Doge a month for a couple of months now. I don't need it to sell it. Should I keep stacking or trade it, sell it? Opinions, anyone? Yeah, I try to tell people what to do. I say always, in my opinion, I say regardless of what you decide to do, just have some exposure to it. Because I do believe we haven't seen the best of Dogecoin. Let's see. Awesome, David. Thanks. I will now. Okay, perfect. Let's see. Brandon Payne, not just Doge and ETC, but there were a number of coins that peaked last April and May that have been bleeding ever since. Yeah, all the coins, because and that's one of the things that when you have funny money in the market and you have hype around the market, coins typically can overshoot where they otherwise would be. And this is why I have like my predictions I do like on Bitcoin and a lot of the other coins, that you have a lot of the injections on the market and people count them as, oh, well, this is the all-time high, so we should get back there. And the circumstances may be completely different, because if hedge funds and these institutions are, if it's raining money, then it may be okay to be like, oh, hey guys, let's just put 30 billion here, 10 billion here, or whatnot. But if money is a lot more harder to come by, that 30 billion may be 15 billion. So you're not going to get the same type of price reactions, because I think what a lot of times what people do, and this is what I say, we have to look at the macro and the micro, is people fail to realize that the money in the crypto market and most of the money in a lot of these, especially like top 10 coins, that's not retail money. Like it's like retail, you can probably spike it maybe 5-10 cents or something like that, like a Dogecoin. But as far as if Dogecoin went to, let's say 14 cents right now, if Dogecoin were to spike over the next week to 60 cents, right, still below its all-time high, you cannot reasonably say that that's retail that did it. So it's you have to look at the macro as well and say that, okay, well, I know that the same way or the same excitement that I have that if these coins follow the pattern of Bitcoin and stuff like that, you have to be honest and say, okay, well, where's this money coming from? We know that Bitcoin is the chosen coin. We know that it's the institutional favorite. So if you have these coins that are following Bitcoin's pattern, you have to say, okay, well, this is obviously institutional money to a degree. So, when they pull money out, again, like I said, like 10 or 15 minutes ago, these coins are not all evenly weighted. So they may have something where say, okay, well, we're going to take profits from Doge, or take profits from polka dot or something like that. And we're going to keep, obviously, we're going to take profits from Bitcoin and Ethereum as well, but because they're weighted heavier, we're going to keep the percentages are going to be different. So you will have these coins that have these wild swings until they have their footing, which is one of the reasons why I always say that we need to push for utility in Dogecoin, so that we're not just completely depending on these catalysts or these institutions running in and swinging the coin wild. Because if you inject a bull market with institutional money along with FOMO, you're going to have great appreciation in these coins. And then when you have less institutional money or less FOMO, and the catalysts are a little bit are more infrequent, you're going to say, "Oh my God, what's wrong with the coin?" There's nothing wrong with the coin. The money isn't funny anymore. It's not these large injections of cash from nowhere, so that these people are pulling the rug from under people and just throwing money into different things. It's just more of a I think that this is what's going to happen this year with these Fed hikes. We're going to get to more of a point with the market being more normal. So so that these are types of the reactions that we're going to have from some of the coins that had some of their peaks last year. So it's not just like, oh, we're going to get to 74 cents on anticipation or it going to the moon or YouTube videos and stuff like that. You get to 74 cents, it's going to be because of utility and because of these partnerships and because of these integrations. So it's a different method to getting there versus people just piling into a coin hoping to make money. Because when you have the similar to like the Tesla merge, when you have coins where people just pile in to make money, that's part of the problem. They're there to make money. A lot of them are there to short term. They're going to bet money, especially if it's going up rapidly. They're going to bet money that they can't afford to lose. These people will sell first. Everybody online is diamond hands, but I can assure you, in those portfolios, there's a different story. So our road back to those all-time highs is going to be different from last year, and for the health of the community, we should want it to be different from last year. If you're counting on hopium and hype and stuff like that to get us there, then you're just going to have a repeat of last year all over again. So I know I didn't know it like a little on like a tangent there, but yeah, that's one of the reasons why things appear to be like bleeding out from like last year. Let's see. I heard Chris Crypto might make a coin. Oh man, y'all are wild. 50 Dogecoin plus 30 million strong. Mickey Dimbo. There we go. He said a rug pull coin. Okay, I know what you guys are talking about. Y'all are funny. David was legit. There been plenty of YouTube channels that are ran by scum. Yeah, it's wild out here. It is wild out here. YouTube is you got to vet your information. Just I'll say that you should just vet your information. I'll say that. David, I would be happy for a repeat of last year and not a repeat of 2018. No, I understand. I understand. I just think that for longevity and health purposes, we need to just make sure that we're doing it on substance and not hype. Because the truth of the matter is, psychologically speaking, more people will buy. So right now, the majority of people will say at 14 cents, they'll say that, oh, Dogecoin is, it's dead or it's stagnant and stuff like that. And even though they've had months to buy in at these prices, if Dogecoin went on a run right now from 14 to 40 cents, more people would buy into Dogecoin on the actual run than has bought into Dogecoin like in the last 4 or 5 months. Why? Quick money. And the dangers of that is that FOMO causes coins to overshoot. And then, of course, it causes coins to overcorrect. I've used the analogy on the channel before, but if you take like a rubber band and you put it between your fingers and you pull it up and you let it go, before it reaches this equilibrium, which is, I guess you can say, fair market value, it'll go below. And it does like this thing here, like this yo-yo, until it like slows down and reaches that point of equilibrium. Typically, that's what happens when you have these coins that overshoot and this FOMO and hype and all that kind of stuff runs into the coin. You have the coin overshoot its actual value. Then people panic or sell or whale dumps from underneath them. bad catalyst, whatever, and then the coin shoots down below. It's on equilibrium, and then you have like this period of consolidation, and then eventually you'll reach your average. But when we say we want a repeat of last year, we just have to make sure that it's built on actual substance, because last year was mostly institutions re-entering the market after taking profits, and people were in pretty much over the last year. It was difficult to lose money. Almost anything you invested into appreciated. So we have these indicators that are going off, and a lot of times people that were buying these coins or buying stocks, they weren't really losing money. So whenever you seen something run, it was like this, literally like a shiny object syndrome. It was like, oh, this coin has just did 100%. Oh my God. And everybody just runs over here. Oh, look, Dogecoin's brother. Oh, everybody runs over here. Oh, look, Dogecoin's stepsister. Everybody runs over there. And then you have like this mess going on in the market. So I just don't want, 'cause in long term, a lot of these people are going to get killed. And they're just being honest. Because when you start chasing gains and chasing catalysts and hope, you at some point, even if you get away with it the first few times, at some point you're literally going to get killed. So I don't mind a repeat of last year. I just want it to be based off of substance and actual utility and stuff like that, so that people can, even if it doesn't necessarily like moon right away, you're not at the risk of trying to get 300%. You lose 80% of your money because you invested in a coin nobody heard of, and it ends up getting rug pulled because the devs own like 90% of the coin. They put 10% out and let you guys pump it, and then they pull the rug. So it's just, I'm minded. I think it's just better ways to hit those numbers. Let's see. Every day I go to YouTube and report those live stream scammers. Yeah, I know. Yeah, I know a lot of people were doing that, so I understand. I understand. Let's see. Do I think Doge will keep it in the range for more than a couple of years, just like from 2018 to 2021? I doubt it, unless we went to like really, unless we went to like hell in the market overall. I don't see that happening, because I think outside of the crap that we're into now, the best thing that happened to Dogecoin was the not Dogecoin, but the market in general. Well, I say Dogecoin. Dogecoin expanded the crypto market single-handedly. I seriously believe that the reason we have so many of like what's like Dogecoin's wife, and Big Doge, and Baby Rottweiler and stuff like that, is because Dogecoin made headway so much and everything. And then you see all these other coins like, this is the next Dogecoin, and we're going to destroy Dogecoin and stuff like that. It became the focus point because everybody came in and they wanted to duplicate that success. Dogecoin expanded the crypto market. There are a lot of people that were not in crypto, and there are a lot of people that are not in Dogecoin anymore, but they got into crypto because of Dogecoin. So I don't think that the market can consolidate to those levels again just from sheer expansion. So I don't think that it can, stay in that range for long, especially if we're growing and having the utility and stuff like that. I think that as a lot of those coins, like the ones I just named, as a lot of those get weaned away over the next few years, people are going to invest in things that have more substance and have stood the test of time. Because what we're going to see here over the next year or two, we're going to see these coins in their actual lifespans. We're going to see these full retracements in these coins. We're going to see these coins have 6 months or a year lifespan, and they have this hype, and they go up and they come back down, and then nothing. And there's no utility, there's no growth, there's no plan, there's no leadership, there's no anything. And once we see this happen frequently, people will kind of knock out some of that BS. I compare it to a lot of what happened in 2000 with like the dot-com bust, when the internet wasn't a new thing, and whatever you invested in the internet, it was going to go to the moon. It was just easy money. And then, of course, dot-com bust happened, and 99% of those companies, they cease to exist. They're gone forever. And I think that's similar to what's going to happen to crypto as well. So I don't think that, especially as long as we're building these catalysts and the community and we're growing the coin, I don't think that Doge is going to have, an issue whether that be with consolidation points or growth. Let's see. Dogecoin stepsister. Thank you. No, I'm serious, man. It was out of control for some period. It was literally out of control. It is literally out of control. Let's see. Have you seen the rumor SpaceX will be accepting Doge soon? The program is already running allegedly. I've heard about it, but I haven't, I haven't confirmed anything yet. But yeah, I've heard about it. Let's see. David, what do you think about Sheep? Do you still think it will end in a rug pull? What do you think it will end in a rug pull? I mean, Sheep. The last time I looked at Sheep, it got a bounce where it needed to. Because people normally ask me to do TA on Sheep, and I said that when Sheep was falling, I gave the point that it needed to catch itself. Otherwise, she was on the verge of a full retracement. And I know that some of my followers invest in Sheep. Let's see. Let's do USD. So Sheep should have. So this is the point that I gave here. I was saying that Sheep should have. Let's do 1 year. Had a bounce around here because so Sheep was pretty much was doing like this thing of these higher lows, and literally it was on a verge of doing a full retracement. And within range here, it should have technically caught itself and either trended sideways or got a rebound. And that's what happened. So as of right now, Sheep is okay. So if she would have broken below this support, these are green right here. This is a gap. So that it was looking like it was going to fill the gap and do a full retracement down here back to like 751 down here in this area, which is literally a full retracement, which is catastrophic for a coin, especially less than a year. So as of right now, it got the support that it needed and it got a rally. Shiba has a big community, so it's possible, as long as they work on like utility and stuff like that, for it to grow. But as of right now, they're literally on their last support line. So because it's kind of like where we are with 14 cents, Doge still has like 2 support lines left before it is at like its full retracement for like the year, stuff like that. Yeah, she was at its last support line. So, but it rallied and it's back up here to, what is this? It's 18th of January support. So yeah, as long as it's trending sideways and building that support and hanging on, it's fine. It's not one of my long-term plays, but if you're in it right now, as long as it's at this support or the one below it, it's not bad entries for it. You just kind of got to be careful because when you're at the last support line, you don't know what some bad news or a major catalyst or some money leaving the market can ultimately do to the coin. So just got to keep that in mind. Let's see here. Let's see. Have you heard of Baby Lambo Inu? A few YouTube influencers like Wallace were pushing it. Do you think it's a rug pull? Baby Lambo Inu. Yeah, I have heard of it. And it's like again, stuff like that it's dangerous. When you just have to look at the coin overall. Like I have to look into it before I can give like a conclusive opinion on it. But again, we have to look at the longevity, vision, community acceptance, and stuff like that. But if it doesn't have those, then you have to look at, okay, what's the purpose of the coin? Like, why? Where is it going? And then when you have like influencers and stuff like that, that when they, because I don't know, because I don't want to start anything like on YouTube, but it's just that you just got to be careful with stuff like that because you can have coins that deals can be made before the coin comes forward. So people can have positions in coins prior to at certain prices prior to you having an entry, and then you have increased incentive to promote these coins and stuff like that. So you just gotta be, and just think, if you're, if you're interested, if you're trying to flip money and stuff like that, you can make money. You can make money, flipping, horse manure. But you have to look at the long term and say, okay, if I'm long in this coin, what's the actual purpose of the coin? So I'll just say that because I don't want to start anything on YouTube. But just be careful when it comes down to stuff like that. Let's see. You can make money with Matic. I watch ADA every week because they go up and down so regular. Don't bother with those scam coins. Yeah, there are certain coins that you can certainly trade and flip and stuff like that. So it's definitely the opportunity for that. And if you guys haven't yet, hit the like button on this video so that it gets shared out to everyone. And subscribe to the channel if you want to hear more from me. I do TA on these videos, no hopium, no hype, no funny money stuff. I don't have a coin, any of the stuff that we talked about. So definitely if you want to hear more from me, definitely do that and like the video. Share the video as well so that we can continue to grow here. I don't want to make this video too long, so I've been on like an hour and a half, so I'll call it here so that people, they want to watch the replay. They're not on here forever to get to like certain points. But with that, you guys know the drill. I'll be back on. I'll cover some of the best things on here, like the Fed meetings and stuff like that. We'll be back to our regular programming as far as for videos and stuff like that. But again, like, share. Let me know what you think in the comment section, and I will see you guys tomorrow. Have a good night.